price of a single Bitcoin has climbed above $100,000 for the first time.
Bitcoin climbs to its highest level since late February.
The United States and China have reached an agreement to slash tariffs on each other's goods, complete with a 90-day pause for future negotiation.
I want crypto. I think crypto is important because if we don't do it, China's going to. And it's new. It's very popular. It's very hot. If you look at the market, when the market went down, that stayed much stronger than other aspects of the market.
In November 2022, FTX collapsed. Bitcoin bottomed and rose by 50% over the next 3 months. In March 2023, U.S. banks began failing, triggering a banking crisis. Bitcoin bottomed and rallied by 52% in the following 3 months. In August 2023, Evergrande filed for bankruptcy. Bitcoin bottomed and moved up by 52% in the next 3 months. And again, in August 2024, the yen carry trade unwind sparked recession fears. Bitcoin bottomed and went up by 43% in 3 months. Bitcoin loves to bottom during market panic, right when everyone is convinced that the stage is set for Bitcoin to move lower. That is exactly the moment where it begins to move higher. In each of these cases, Bitcoin exceeded its previous highs by at least 20%. Now, in April 2025, Trump announced tariffs across pretty much every single country. But instead of triggering a bear market on Bitcoin, price bottomed just 1 week after Liberation Day and has already rallied by 40%. If Bitcoin were to move 20% above its previous highs today, it would mean a rise to $130,000. But some people are still calling today's rally a dead cat bounce. So the big question now is whether we can actually expect this rally to keep going. Since the beginning of this bull run in 2023, Bitcoin has outperformed every other major financial asset. It has delivered 240% more than gold, outpaced the S&P 500 by nearly 300%, and outperformed U.S. Treasury bonds by more than 600%. What's even more notable is Bitcoin's behavior after the recent bottom in April, following the Liberation Day low. Rather than following the traditional path of a risk asset and lagging during periods of heightened uncertainty, Bitcoin took the lead during the rally. This divergence is precisely why skepticism around the current rally remains elevated. Some people argue that this is simply a dead cat bounce, or another temporary recovery in a broader downtrend. And given the macro backdrop, like tariff uncertainty, interest rate volatility, and recession fears, it's understandable why some remain cautious. But to evaluate if this move is real, we can't look at Bitcoin alone. We need to turn our attention to the broader US equity market. If we add the chart of the S&P 500 on top of the chart of Bitcoin, we can see that there's quite a strong correlation between the two assets. People sometimes think that Bitcoin moves separately from stocks, but history shows that Bitcoin typically follows the stock market, both in good times like 2014, 2017, and 2021, and also in tough times like in 2019 and 2022. And we can also see this statistically. This chart shows Bitcoin's average weekly returns compared to the S&P 500. The S&P 500's returns are split into 5 groups, from worst on the left to best on the right, and the chart shows how Bitcoin performs in each of these cases. When we take a look at this data, it clearly shows 3 key relationships. First, when the S&P 500 goes down, so this worst group on the left, Bitcoin tends to perform very poorly as well. Second, Bitcoin performs well when stocks perform well, like we see in these last 3 groups. And last, Bitcoin actually performs the best when the S&P 500 is showing a moderate rise, like we see here in the center group. When markets are rising steadily, so stocks aren't moving up too fast and stealing all the attention, investors look for higher returns in other assets, such as Bitcoin. So if Bitcoin's rally is going to last, the stock market needs to be moving higher too. The question now is, do we have any clear signs that the stock market is ready to continue moving higher? For that, let's look underneath the hood of the stock market. One of the most effective ways to do that is by looking at something called market breadth. This is a measure of how many individual stocks are participating in a move, not just how far the index itself is rising. Think of it as the difference between a rally led by just a few big names versus one where most stocks are moving higher together. A great way to track this is by looking at this line that shows the percentage of S&P 500 stocks trading above their 50-day moving average. When this line is falling, it means that fewer stocks are participating in a move. And when it's rising, it signals broad participation, which is a key ingredient for a sustainable rally. Recently, market breadth went 5% to over 60%, indicating a major switch in bullish momentum. This is called a breadth thrust, where there is a sudden surge in the number of stocks participating in a rally. In the past 10 years, we've seen such breadth thrust only 5 times. Here in October 2015, January 2019, April 2020, July 2022, and November 2022. Now, if we add the S&P 500 on top, we can see each of these signals occurred near the lows. In January 2019, April 2020, and November 2022, the stock market had already put in its lows before steadily moving higher. Whereas in October 2015 and July 2022, the market experienced a brief undercut of the lows before actually bottoming. Today, we have seen the exact same signal flashing once again, indicating that stocks are very likely to move higher in the coming months. And such an environment should be supportive of a Bitcoin rally. In fact, if we replace the S&P 500 with the price chart of Bitcoin, we can see that each of these signals also occurred near the lows for Bitcoin. We believe that today's signal is also indicating a similar outcome. Of course, that doesn't mean that we can't see short-term downside or a consolidation period on Bitcoin. Both the signals from 2022 still saw short-term downside before an actual bottom. But then they occurred during a bear market, which is not really the case today. However, the signal from April 2020 saw Bitcoin go sideways for about 3 months before moving higher. Such a move today is possible after such a strong rally in less than 2 months. But irrespective of the scenario, one thing is certain. This signal has historically proven to be an incredible buying opportunity for Bitcoin from a 6 to 12-month time horizon. In the near term, Bitcoin has shown strong momentum, breaking above the key $97,000 resistance zone. This zone should now act as support on any pullback. On the upside, the next test is the previous high near $110,000. If price can clear that level, then we'll be looking for a move toward the $120,000 to $130,000 range. By the way, we've made some incredible gains in the past month. S-Lock has secured a 351% profit in April with a 92% win rate. Trades like MEXC, Wild, and CHR have helped our members make triple-digit gains. If you want access to trade plans, market updates, and real-time trade alerts from 3 professional traders, make sure to join our crypto trading membership using the link in the description below.